and tell me if I'm understanding all of this, because every time I research you, every time I talk to you, realize that I feel like I understand everything you're saying, and then I'll spend, 8 more hours with you, and I learn that much, and then I learn this much more, and it really does impact how I view uh, Bitcoin for sure, money definitely, and then the idea that I think you're trying to get across between the words, which is sovereignty and mobility. So, for the first time in my life, I feel like we're entering a period of political volatility that finally has me going. I don't like the idea of being grounded in any one area by the things that I own. So I'm in the process now of selling my homes. And I never thought that I would get there, but I happen to be in California where they take a very aggressive posture. And so that clicked over for me. Now, hearing you talk just now, the ability to get because right now, a significant portion of my net worth is tied up in real estate. And that was me growing up. That's where you wanted your money. So that was just like a sort of default response. So tied up in real estate, but to your point, I can't move the blocks of Los Angeles to somewhere with more favorable, let's say, entrepreneurial leanings. So I have a real grounding here, certainly with that money. But I could put that money in a form. So one, I want to remind everybody what we said at the beginning. So money is you transferring your time, your energy, but also your efficiency, your intelligence into a thing. That thing could be money, or in this case, I have for me, a lot of that tied up into physical property. And so, okay,
we
cool.
monetized real estate. We monetize real estate when we devalue the currency. And so your property becomes your store of value money.
Right, which getting everybody to understand that the more knowledgeable somebody is about money, the more they are constantly looking for, where can I put this money that it will stay, it will retain the purchasing power that it has, or that its purchasing power will go up. Now, right. I lived 40 years of my life without ever asking that question, because all I ever thought about was generate money, whether that was generate a paycheck or whether that was build equity in the company that I would ultimately sell. But once I sold a company and all of a sudden had, a very substantial amount of money, all of a sudden I had to understand investing. It was a real shock to my system. So just understanding that you're putting your money into something that you hope will retain its value or grow its value over time, but there are massive complexities. So if you're living in a house and you're thinking that it's doing that, you're actually paying a lot more money for that privilege than you think. So that's certainly something to contemplate. But anyway, by looking at where else I could put it, you start asking a series of very interesting questions. Now, one of the more interesting collisions with you that I think is between you and Peter Schiff, but not as Peter Schiff relates to gold, because as you very aptly pointed out, he owns like 5% of his portfolios in gold. He obviously doesn't have a real big belief in that. And the parts that he does have in gold, he has in gold miners who are actively shorting gold. Cool. Right. But what I think he represents, and Jesus, I'm speaking for somebody I've never met or spoken to, but what I think he represents is, we'll call it something more like Ray Dalio's idea of diversification based on like what's happening. And he's got the idea of an all-weather portfolio. So it seems like what you represent to me is somebody who has tremendous conviction, possibly a lot of risk tolerance, which is something that I want to better understand about you. And everybody else, myself included, is more like, I'm not sure. I don't know. So I have what many would consider an irresponsible amount of my net worth in Bitcoin. But I put in as much as I was willing to lose. And so, but I put in over about a year, I dollar cost averaged in over a year, and then said, cool, that's all that I'm going to do. So even though the price has gone down, I'm not buying more as of right now.
I just want to make the point, like, I think the real issue here is, do you have an engineering mentality and reason from first principles, or are you simply complying with the norms of society and conventional wisdom that you grew up with? People say things and they repeat these bromides, and they give you a simple rule of thumb, like, oh, the rule of thumb is 60-40 stock bond portfolio. Or the rule of thumb is stay diversified, or the rule of thumb is, buy the biggest house you can and get the biggest mortgage and you'll be fine. Okay. Well, those are all fine, assuming that you have equilibrium and you don't have a radical state change. For example, that all those rules of thumb they don't work if you're a Jew in Nazi Germany in the 30s, right? Buying a house to store value doesn't work, right? Trusting the government. How about trust the government, keep your nose clean? That doesn't work, right? Buying stocks, that's an interesting thing in the US when the money supply expands at 7% a year. Do you think stocks work if you bought stocks in Zimbabwe or stocks in Cuba or stocks in North Korea or stocks in Argentina or stocks, fill in the blank? They don't work. What happens when the government crashes? You think stocks work in Sri Lanka? Right? No. How does stocks work in Russia in the 90s? Well, the entire currency collapsed, the government collapsed, everybody lost everything. So, diversification doesn't work when every single thing you own in your portfolio is correlated. For example, you can buy any company you want in Germany in 1944. How's your diversification going to work, right? How about buy anything you want in the city I'm about to drop a nuclear bomb on? How's that going to work, right? So diversification is a bromide. Stocks, bonds are a bromide. Real estate as monetizable property, it's a bromide. It only works if you can trust them. How's it going to work when I actually get elected mayor and I just seize your entire property to make into a pet hospital for the good of the people? Or how about this one? At what property tax rate? If property tax are 20 basis points a year, maybe property is money. What happens when they're 200 basis points a year? Property tax rate in Florida is 2% a year. Okay, if you don't have the homestead exemption and you're not a citizen, then that means you buy $10 million worth of property, you pay $200,000 of tax, then they actually assess it up 15% a year. So that means that in 10 years, the property's valued at 30 million, you owe $600,000 in tax. In the next 5 years, you've lost all your money. Okay, but I thought Florida was low tax state, huh? I thought property was a good investment. Well, let's make it simpler. What if I make the tax rate 5% a year? What if I make it 50% a year? Like, what if, so the point really is all of these are simple rules of thumb that allow people to not think for themselves. You're on a ship, the ship is sinking, there's 10 boats in front of you. One of the boats doesn't have a hole in it. The other 9 boats have holes in them. You got 10 members in your family. Are you going to put one kid in each of the 9 boats or the like? Or are you going to put everybody in the boat that doesn't have the hole in it?
Okay, so you come to that level of conviction, which is intoxicating, by the way.
It's not conviction. It's not conviction. It's just rational thinking for yourself. Are you moving your entire family to Zimbabwe right now because, you have conviction? Or let me reverse it. Why is it that you don't move your entire family to Zimbabwe, sell all your stuff, and buy the Zimbabwe dollar? Why is it that you don't do that? Because of conviction, or just because it seems quite obvious to you that's not a good idea?
I won't say that conviction is when you don't do something, but when you go all in on something, I would say that does take conviction. Now, your conviction might be.
How many chairs are you sitting on right now?
1.
Are you all in on the chair?
I am all in on the chair.
Like the point really is you put on one pair of glasses, you've got one pair of AirPods right now. You're looking at me through one screen. You're using one microphone. That's one microphone. Like, you trust it? Is that conviction? Seems kind of scary. Why don't you diversify? Why don't you use 10 microphones? The point really is things in your life. Do you drive in 10 cars at the same time or one car at one time? Do you drive down one street? Aren't you afraid that you're driving down one street? Do you take a different way? You know? So my point really is, if you're you get on one airplane, are you convicted? You put your entire family in the one airplane, aren't you afraid? Ultimately, if you're a rational individual, when you use knives, do you have copper knives, wooden knives, steel knives, aluminum knives, rubber band knives, diamond knives, because you're afraid to commit to the right knife? It's a tool. So ultimately, what I'm saying here is an engineer would look at this and say, I use glass for my windows. I don't use aluminum for my windows because I can't see through the aluminum, right? I use steel beams. People used to use wooden beams. Steel beams work better, right? I use copper for wires because electricity goes through copper better. I don't use aluminum for wires, right? Am I a radical, convicted, fanatic investor? Or am I just like a rational person that uses copper for wires because copper works better, right? And my point here is, you live in a society and things are going awry. If you did live in a country and the food supply was cut off, the electricity got turned off, the currency collapsed, and there were riots in the streets, would you still just kind of hang out and use the same rules of thumb you've been using? Or would you say, I think I'm going to exit via the airport where there are no riots if I can get on that plane, and I'm going to go somewhere else, not because I'm convicted, not because I'm radical, not because I'm a risk taker. No, I'm just going to do it because I'm an intelligent human being. And I notice that it's getting uncomfortable where I am right now. And so that's the way I see this. It's just thinking for yourself, using reason. Your choice is, you want to hold $1 billion of property in Zimbabwe or North Korea. You want to hold $1 billion of property in LA. You want to hold $1 billion of gold in a vault. You want to hold $1 billion worth of a stock in a Chinese company, Alibaba, trading on the Shanghai Stock Exchange, subject to the Chinese government. Do you want to hold $1 billion worth of Bitcoin? What do you want to hold? Right? Why do you feel that way? Once you understand money, you understand Bitcoin is engineered money, and it's engineered without defects. Once you look at your life, you realize you got a balance sheet. You got to actually allocate your wealth to portions of the balance sheet, and assumptions you used to be able to make about bonds, they don't work anymore. Assumptions you used to make about stocks, they don't work anymore. Assumptions you made about property. You own a yoga studio. I get elected mayor and I tell you point blank, I think yoga is dangerous. People should not be able to do yoga. It's an abomination in the eyes of God for the next decade. You still have the same view of your value of your yoga studio? Or are you going to say, maybe I can repurpose it to something that's politically correct? Or you say, maybe I'm just going to sell it and go someplace where I'm less likely to get canceled, right? As a business. This is not radical conviction, right? The people that, we like to think the people that came to the United States were crazy, but they're not crazy. The reason they came to the US is because they were the wrong religion or the wrong ethnic group in a country that had an encroaching authoritarian government. And at some point, the Catholics decided the Protestants aren't allowed to own property or live. And at some point, the Protestants decided Catholics, they can't own property. And if it turns out that you happen to be a Catholic, you're going to be drawn and quartered, right? And the skin will be flayed off your skin. My family came from Lucerne, Switzerland in 1730, and they were Palatines. They were Swiss Protestants. Okay, why would you get on a wooden ship, travel for 12 weeks, risk 5% chance of death to get out of your hometown? And the answer is because it was a certain death, a certain slow death if I stuck around. And that is the story of America for hundreds of years. Quakers, Protestants, Catholics, Mennonites, name it. Every sect was leaving and emigrating because the life was hopeless where they stayed. And I don't know, I call that radical conviction as much as I would just say, at some point they realized that it was riskier to stand where they are than it is to move somewhere else. And if I look at Bitcoin, I'm not going to say, well, let me say it this way. If you're in a city in the middle of Africa taken over by a dictator who's going to murder everybody next Tuesday, I would say convert all your wealth to Bitcoin and leave. Okay. If you happen to live in Florida or Texas and you've got a comfortable life and family and you expect to be there for the next 30 years and you want to own some land, a building, a restaurant and some Bitcoin, I say, okay, a diversified portfolio. I guess that's fine for you. And if you're somewhere else where, if you're sitting in a country where the bank is about to freeze your assets and devalue them 10 to 1 and trickle them back to you over the next 20 years, I would say on the margin, yeah, you probably should convert them all to Bitcoin and get them out of a custodian because the volatility of Bitcoin and the risk of Bitcoin is a lot less than the risk of trusting the bank and trusting the government and trusting the local currency. So ultimately, everyone's got to decide just how risky is their macroeconomic situation. And if you happen to be wealthy living in Manhattan and you're living off a trust fund, you might not have a problem. You might think it's okay. But, ask people that fled Cuba or North Korea how okay it was, right? There's everybody's got to make their decision. The lucky thing is you have an option. Today you have an option. 30 years ago, 40 years ago, you didn't have an option to move all of your wealth onto a crypto asset network. And what Bitcoin represents is hope. It's hope for a refugee that's going to flee a hostile regime, a hostile banking system, a hostile environment. And if you're one of the 3 or 4 billion people that has no hope otherwise, then for you, it's really a egalitarian, utilitarian entitlement. For people that are rich in the Western world, it's just an investment option for them until they get sensitized to this issue. And the more you get sensitized, then you start to realize that it's a moral imperative, even if not for you. Maybe you're rich and safe. It's a moral imperative for you to support it for them, for people that are in Africa or South America or fleeing from a war zone or fleeing from a hostile regime that's going to confiscate 20, 30, 40% of their property every year forever. So even if you don't think you need it in order to protect your family for the next 30 years, seems to me like you might want to support it just because it's the right thing for humanity. And that's where I come down on this situation.
COVID hits and I'm like, whoa, the monetary system is blowing up. I'm super scared for other people that basically they have no sense of how to invest or if inflation is going to go crazy, like how to protect against that. And so I start bringing on financial experts and none of them could talk at the street level about like, what does the guy do that's making $52,000 a year? What does that guy do? And none of them had an answer. And then I come across you and you've got this idea that we're having a once in 1,000 year opportunity with Bitcoin. And I'm like, I've got to get people to understand how you have come to that conclusion through first principles. And then like we can get to sort of what they should do. So walk through how you go from that sort of early tweet that you just sent off as a whatever saying, Bitcoin is never going to be anything to like, whoa, this is real. And as a person and as the CEO of a company, I'm going all in. How does that change happen?
Well, the catalytic event is the pandemic and the events that took place in March of 2020. And what you saw was Main Street shut down. It literally shut down and came to a grinding halt. And Wall Street had an initial panic and a rapid recovery, a V-shaped recovery. And so we put those two together. You had an L-shaped recovery. Main Street just shut down. And then you had a V-shaped recovery, and we call that a K. But if you decompose it, and I was very sensitive to it because on one hand, in my personal life, I'm an investor. And in my public life, I run a Main Street company. I run a software company that has people manufactures software that does things. So what I saw was if you had a large portfolio of stocks or assets and you went into this pandemic, after the Fed ended up expanding the money supply with the interest rates going to zero and the expansion of the M2 monetary base, the money base, you found that you were actually 25, 30% wealthier doing nothing. You could have done nothing the entire year. As long as, right, the only mistake you could have made is do something, right? If you had $1 billion and you did nothing for the entire year, you had $1.3 billion at the end of the year. On the other hand, if you had a Main Street company and you're generating, let's say, $100 million a year in cash flow and you're valued at $1 billion because of the cash flow, you would have to be generating $130 million after a year to be valued the same, because the value, the assets that the money buy is being devalued by 30%. If the currency is devalued at some rate, and the money supply expanded to 24% last year, so you could use that as your metric, or you could use the S&P 500's return as another metric. But clearly, the currency devalued, which means that if you're a Main Street company, you had to work 20% harder to get nothing. And if you're a Wall Street company, you had to do nothing to get 20% better. And so what I saw was a shift in balance of power, and a shift in wealth. And it was pretty disturbing to me too. It's like, you don't want to be the dentist working for a fixed amount of money that's getting 20% less valuable every year.
So the average person, I think, struggles with that because they're like, well, I'm getting my stimulus check. What do you mean? Like, how's this going down? Cost of bread's the cost of bread. I'm all good.
I think there are some fundamental misnomers or understandings of the world that people miss. And the most pernicious one is the idea that inflation equals CPI.
Which is Consumer Price Index. Average shit.
The idea that there is a number for inflation. Inflation is only 2%, or inflation is 1%, or inflation might be 3%. Okay, that's just a mistaken idea. What is inflation? Inflation is the rate at which the things you want to buy are going up in price. And what are the things you want to buy? Well, you might want to buy pizza, might want to buy Netflix, but you might want to buy a house. You might want to rent a house, but if you want to rent a house, it might not go up in price as much as if you want to buy a house. What if you want to buy a house in the middle of Manhattan? It might go up in price differently than a house in the middle of Kansas. What if I want to buy food? What if I want to buy energy? What if I want to buy a Picasso? Or what if I want to buy something truly scarce? What if I want season tickets to, the baseball game? What if I want health care? What if I want early retirement? They're all things you can buy. You can buy assets. You can buy luxury service. You want to buy a Rolex? You want to buy a Maserati or a Porsche? Luxury goods? Or do you want to buy commodity goods? And there are some things you don't have to pay for, right? They're ad finance, right? Streaming YouTube. What's that? What's the inflation rate on streaming YouTube? Ad finance, right? So the inflation is the cost of stuff. If the money supply is expanding, that means the currency is devaluing. In a closed system, if we want to make that simple, I live in a town and there's 1,000 houses, and I double the amount of currency in the town, and everybody wants a house. What's the price of houses do, right? If the only thing I can buy is a house, and if I double the amount of currency, then the price of the house must go up. Probably go up by 2, but maybe not exactly by 2, but it goes up. If I increase the amount of money, if I raise everybody's salary by a factor of 10, and I keep the number of houses constant, one might presume that the price of houses will go up. How will inflation actually take place? Well, there's a different coefficient for the price gradient, the change in price for everything you might want to buy, and it's different at every point in time. So, for example, if I put you in lockdown and I make it illegal to go to the movies and I make it illegal to go to a restaurant, then the price of restaurants and movie theaters aren't going to go up. If I make it illegal to, or inappropriate to go on a cruise and fly in an airplane, then the price of cruise tickets and movie theater tickets and restaurants, they just don't go up because you can't buy them if you want to. There's no velocity on that money. Okay, what can you buy? You can buy stocks. You can buy crypto, right? So what does go up? Well, if I give you $1,000 and you can go and you can buy stocks, then the price of stocks go up. Now, what happens next? Well, so everybody gets locked into their apartment and they decide they really want a house with grass. So what happened next? Well, 12 weeks after the lockdowns, the price of like suburban housing went up and people started trying to buy houses. They said, this is unprecedented. We've never had so much demand for houses in the suburbs of New York. Well, that's not a surprise. You know what, if your choice is, if I close the parks in the cities and I close your office, then why wouldn't you move out into the country and live at a house with green grass, right? You're not missing out on a restaurant, you're not missing out on a park, you're not missing out on your job. So rational human behavior causes people to take their money and go buy things they want. And where do they buy them? Well, Hampton's real estate went up in price 50%. Palm Beach, they go to the places where they want to go. Did the price of land in the middle of North Dakota go up by 50%? Not so much. It's not a scarce, desirable asset by people stampeding. So what is inflation? Inflation is a vector. It's not a scalar. A vector means you can calculate for 1,000 different products, 1,000 different numbers, and they change every month. So I could give you 1,000 different numbers, 12 different times a year, and it would be different in every city. Everybody can figure out that in Minot, North Dakota, it's different than Manhattan. And it's even different in Manhattan than in Brooklyn. And it's different in Brooklyn than in upstate New York. So inflation is varying by time, by space, and it's varying by every item. And if you want to calculate the inflation index, you have to construct a market basket of goods and services and assets that you would want to acquire. And then I can give you the rate at which that market basket of goods and services and assets is changing every month or every week. Of course, that would be different for every person. So what happened after the lockdowns? Well, we got hyperinflation in some things. Bonds hyperinflated. Cost of bonds doubled in 3 weeks.
Whoa. That's
hyperinflation. Equities inflated. They were up 40%, year over year. Cryptos inflated. Bitcoin was up 300-400%. So the cost of scarce art, the cost of luxury real estate, all of that stuff inflated, or hyperinflated. What didn't inflate? Things that people can't buy. And I could define a market. I could define a market basket of things that don't go up in price by definition too. Right? If I define a market basket of highly manufactured goods that have very low variable cost, right? Like, what's the price of your streaming YouTube video, or what's the price of some manufactured box of macaroni that's 5% food and 95% marketing? Right? I mean, if I spent $2 billion on a factory to stamp out widgets that have a variable cost of 10%, right? Then I've already sunk the cost in the factory. Those things don't inflate at the same rate as, if there's only one Mona Lisa in the world, and if I increase the amount of money in the world by a factor of 100, don't you think that the value of the Mona Lisa would go up, assuming that lots of wealthy people wanted it? And that gets you to the interesting theory of economics, right? If I want to really understand anything in the engineering world, I need to use vector calculus, right? or vector math. I would never use arithmetic. You cannot solve the problem of fluid dynamics with arithmetic. You can't design a boat, you can't design a plane, you can't design a nuclear reactor, and you can't design a bridge with arithmetic.